Hello everyone and welcome to Pimbrook Software's webinar on payroll end of year. My name's Fiona and I'll be running through the webinar with you today. Firstly, just a bit of housekeeping. We have a large group on today, so everyone's going to be on mute. We have put a link to the year-end booklet in the chat box. So if you need it, you can download it there quickly. It's also available on our website. If you have a question, please type it again in on the chat panel on the screen. If we don't get your question on the webinar, I'll reply to it by email, or you can call the office in on the usual support line. But we will have time at the end to run through any questions. So we've structured the webinar today along the same lines as the end of year checklist to keep things consistent. You'll notice that I will also be giving an overview on how Sage Payroll facilitates ERR at the end of this session. So that's the enhanced reporting requirements that have just been brought in. Pimbrook will also be issuing a knowledge-based article with a little video on how to process the ERR in the payroll over the coming week or so. On page 3 of your booklet, you will see the end of year checklist. This is useful because you can tick each task as you complete the work, and particularly useful if you have more than one payroll. So now let's get started. Okay, stage 1, run the year-end software update. First, we want to locate where your payroll is installed. You'll either have a standalone setup where both the data and the program are on this one machine, or you'll have a server client setup where the data is on the server and the program is on each of the client PCs. You can locate where your payroll is installed by going to Help and System Information and make a note of the program directory and the data directory in the boxes on page 4 of your booklet, as you will be needing these later. So on page 4, you've got boxes like this to take a note of your program directory and your data directory. Next, take a full system backup. We recommend you create a folder for all your payroll year-end backups and reports. This could be on your C drive, Payroll Year End 2023, and you can put the full system backup into this folder. You can always copy it later to an external hard drive. To take a full system, you must log on to the system as administrator. Log on as admin by entering the username admin and your own admin password. So once you're logged in, the admin screen, you can then select miscellaneous and down to backup. Click the Select All button and put a tick in the Backup Systems Files box. Now at the bottom there, you get to select where you want to store the backup, and you can select the directory you created earlier and add a new folder under it called Full System Backup. So it's C Payroll Year End 2023/Full System Backup. So you'll get a confirmation that the backup was successful, and just OK that. So before you go ahead and run the year-end software update, which is version 26.3, I just want to bring a few things to your attention. Depending on your operating system, it may be necessary to have administration rights on your computer. So if you're unsure about this, contact your IT company or your in-house IT person. The Sage Payroll version. Please ensure that you're on 26.0 or higher before you run the year-end update. Also confirm that you're on 26.3 after running the update, and there should be a 2024 icon on your desktop also. The payroll status should be at end of period or start of period before you run the software update. And again, before proceeding, close all applications which are open on your PC, including Sage Payroll and in particular any Sage products. So where do you get the payroll end of year software update to run? You may receive an automatic notification to download the update from within your software. So Sage have already started to roll out this update, and if it's not available yet from within your software, it will be over the coming days. But if you don't get a notification, try clicking help and then check for updates at the top of the screen. Alternatively, you can download the Payroll Year End Update from our Payroll Year End 2023 Knowledge Base article. And this is going to be emailed out to everyone in the next day or two. The link is on the screen below there as well. Also note that if you have a server client set up, you will need to download this software from our link, as it will have to be run twice on the first machine. So now you're ready to run the update. So click on the 26.3 exe file icon on your desktop or the file in your downloads area. So you'll get this message that it's extracting installer. Please wait. Next screen, you just need to tick the box to accept the terms and then hit next. Select which type of installation you need, this computer or server client setup. So we went through this earlier. If your data and program are on the same PC, then you select this computer. If your program and data are in different locations, then you have a server client setup. So with the server client, you will need to run this installation file twice on the first PC. The first time, select server. The second time, select client. And then after that, you can update any other PCs you need just to select the client. So talk to your IT if you need help deciding which one you have. So once you've selected one of these, you hit the next button. Your next option then would be to select typical or custom. Always select custom. Here you're going to check the program folder and the data folder match what you wrote down on page 4. So if they don't, select the browse button and point it to the correct location. So the installation will run through several pop-ups and will eventually give you the option to finish. But if you have a server client installation, you just follow the installation guides on page 12 of the booklet. Launch the 2023 software and check that you're now on version 26.3. Just to note that if you have upgraded from 26.0 or 26.1, you will be asked to reset your user, your payroll, and your admin passwords. This is because this version 26.2 introduced mandatory minimum password requirements of 8 characters being made up of at least one letter, one number, and one special character. Some of you may not have had any password on your payroll itself, and this will be the first password that you'll be asked to set up or change when you launch the updated software. So just watch out for that when you're opening the software. Check that the installation has completed by looking at the version number at the top of the screen. And again, it should say 26.3. And that's your stage 1 completed. Payroll year-end update run. So stage 2. Before you process the final payroll of 23, I just want to bring a few things to your attention. As we know, the payroll submissions are in real time, and this information is available to revenue and employees once submitted. This year, we expect that there will be a cutoff for the 2023 RPNs and submissions, again at the 31st of December 2023. So you need to contact revenue if for any reason you cannot meet this deadline. And this is because processing after this date should be in the 2024 calendar and in the 24 software. Like last year, employees can retrieve an end-of-year statement by logging into their Revenue My account. Might be a good idea to remind your employees of this at this year end, in case they're looking for P60s. Year-end payroll is all about pay date, And now's a good time there to remind everyone about the pay date rule. The pay date rule means that if the planned pay date for a period is a 23 date, then the period belongs in the 23 software. And if the pay date is a 24 date, then the period belongs in the 24 payroll. So if you're running, by the pay date, I mean that the date the money will be in the employee's bank account. So if you're running a weekly payroll, it is okay to finish on week 51 if all employees are paid for a double week. This means they will get 2 tax credits, 2 insurable weeks, and 2 weeks worked. So please be careful though with holiday pay over the year end. Holiday days taken in 23 should be processed in the 23 payroll, and holiday pay for days taken in 24 should be processed in the 24 payroll, as in using the 24 tax credits. So next, we'll just have a look, as we usually do, to see if you have an extra pay date in 23. So the extra pay date, or the week 53, happens because the number of days in the tax year doesn't divide into a whole number of tax weeks, and that's what they call week 53. I'll start by saying that in 23, there should be nobody with a week 53. There should be no week 53s at all. We strongly recommend that you do not change the pay date or do anything to artificially create a week 53 or an extra pay period. So remember here that Revenue want employers to pay on the same day of the week all year round, including over the year end. But when it does occur, a week 53 must be run separately. It can't be a holiday period from within week 52. And this is because the system needs to apply the week 1, month 1 tax and USC status for the extra week. It does that automatically. But Revenue want to see the week 53 submitted separately, also because of its tax status, and a separate payslip generated. Employees should not be paid in advance for the week 53. They must be paid up to the 31st of December. The submission for week 53 can be submitted to Ross prior to the 31st of December, but the pay date must always be the 31st of December. So that's just a few notes about a week 53, but you won't be having them this year. Just one consideration now when setting the final pay period of 23. This is only where your final pay date is the 31st of December 23 and happens to correspond to the final day of your holiday year. In this instance, the system will prompt you to roll forward holidays and absences year. It is unlikely to happen this year because the 31st December falls on a Sunday and it should not be nominated as a payday anyway. So select here, do not roll forward your holiday and absence year, as this isn't the right time to do this. So if your holiday year ends at the end of December annually, then period 1 of 2024 is the correct time to do this, to say yes to this, and you'll be asked again. Once you've processed your final pay period, end the period as normal, send your payslips and the file to the bank as normal, and we'll then move on to step 2 of stage 2. So your step 2 is to compare the control summary and the employer monthly liability report. So we'll go through printing the control summary first. So we're up the top to reports and then payroll reports. In the Payroll tab, select the control summary and then print from the right-hand side. To print the employer's monthly liability report, go to the Company tab in the Payroll Reports option and select the employer's monthly liability report. And again, just print from the right-hand side. Next, you'll have the option to select all payrolls registered under this same company number. But for this exercise, we suggest you select only one payroll at a time. You select continue and then print, and you'll be given the option to select quarterly subtotals and to show employee and employer PRSI separately. So make your selections there and then continue, and the report will be printed. So now you have the 2 reports printed. It's time to compare them. If this chart is a bit hard to see on the screen there, you can also view it on page 21 of your year-end booklet. So along the top, we have the control summary, and below it, we have the monthly liability report. The green, blue, and red lines link the figures from both reports, they should match each other. For example, the green is the PAYE, the blue is the PRSI, and the red is the USC. You'll also need to run a deductions report for the LPT, which is there in the yellow at the bottom. To run the LPT report, go again to the Payroll Reports option, the Payroll tab, and select the Deductions report on the left. Put a tick in the box Include Levers, and then select LPT from the list of deductions there on the right-hand side. We recommend you also save some other reports for the year end. You can select the PDF option and then save them to that year-end folder that you created earlier. Besides the controlled summary report, there's also the earnings tax and PRSI, the employment details summary, we did that, and the ASC reports. So I'll go through the employment details summary report and the ASC report because these ones you usually do just once a year. So the employment details summary report, you go up the top to year end and then tax year end reports, and you'll see the employment details summary in the employee reports section. You can also see this is where you can access the ASC 35 and the ASC 60 there on the right as well. So the employment details summary, it's like the old P60, but it's a summary for the employer. You can give it to the employees if it's requested, but we do not recommend issuing it routinely at year end. You can also include levers, and you can select which employees you run it for or leave blank if you want it for all employees. So you have the option to print or PDF this, and again, save it in your year-end folder. This is what it looks like there. It's just a one-page summary for each employee. Okay, the ASC 35 is a statement. If you are in the public sector and ASC applies to you, to your payroll, you'll need to print both the ASC 35 and the ASC 60 reports. Again, you're going up to year end, then tax year end reports. And here you get the option to run this for all, or again, your specified employees if you need to. More details again on this are on page 24 of your booklet. And this is what the ASC 60 looks like. And again, you'll get one of these for each of your employees in your scheme. And the last thing to do before we leave 2023 is cover a bit of housekeeping. There are 9 steps in housekeeping on page 27. The first is to validate your payroll. You should be doing this every pay period anyway. To do this, you go up the top to select reports and validate payroll data. You can now set Sage Payroll to automatically validate your payroll when you set the period. You select reports, validate payroll data, and start of period settings, and you make your selection in there to set that up. When the validate payroll data procedure runs, the results will be displayed in a window broken down by company issues, employee issues, and GDPR issues, if you have any. So you will click in the blue Issues Found link to see a list of issues found and for suggestions on how to resolve the issues. You should apply any solutions that are suggested. And if you're in any doubt, you can always contact the Pimbrook Support team. So for any more details on this housekeeping points 2 to 9, you can have a look at the end of the booklet. And that is stage 2 complete. So we're nearly halfway through. So stage 3 is starting your 2024 tax year. So let's just go through again a few things before we start. Firstly, what does the software do when you select Set Up Tax Year 2024? Basically, the software transfers over your payroll data to the 24 software. And as part of this process, it'll tidy up a few things. It'll clear the RPN submission logs. So neither the RPN or payroll submission logs will come across to 24. These logs start again for the new tax year. It'll reset the RPN numbers in your 24 system. The RPN numbers in employee details records will be cleared and as per revenue guidelines, and the RPN numbers will start again at 1 for the new tax year for each employee. It will only import RPNs that are current, so it'll only import the 24 RPNs. So in the first week, it should import an RPN for all employees, and their starting number is usually 1. It'll clear any expired PAYE exclusion orders. So it'll examine the exclusion orders that it has and look at the has effect until date, and it'll clear out any if appropriate. Another thing we need to make a note of for this year end is the CWPS calendar year. So from January 2024, the CWPS calendar will revert back to January to December. So it's currently on October to September. And this means that you must now run the CWPS year end. A new calendar must be set up and the CWPS balances and history must be cleared prior to setting the first period of 24. We will go through this later in the presentation. Now to get on and set up the 2024 tax year. So ensure first that you're logged into the 23 payroll. Select year end, then tax, and then set up 2024 tax year. You'll be presented with the payroll setup screen. Click continue to start the process. During the process of creating the payroll for 2024 tax year, employee cumulative values coming forward from 23 are cleared and all levers are removed. The payroll data for 24 then is stored in a separate directory from the 23 data. Eventually, you get the message, you have successfully copied your payroll data into Sage Payroll 2024. You must now open 2024 software to continue. But you can actually have the 23 and the 24 software open at the same time. To open Sage Payroll for the new tax year, you double-click the Sage Payroll 2024 shortcut icon on your desktop. Log into the payroll in your usual way, and you can now work in the 2024 payroll. Note your payroll status and period will be blank until you set up the period for the first time. When you do log into your 24 payroll software, ensure that your Sage version number at the top is saying version 27. And also check the limit of employees. This is shown again in the title bar. So step 3 of stage 3 is setting up your new payroll calendar. So up the top to company payroll and down to calendar. If your financial year is the same as your tax year, you'll now be prompted to clear out the financial figures. So you click continue to complete this. If your financial year runs from January to December and you don't clear down the balances before processing the first period of this new tax year, you won't be able to clear down the balances at a later stage during the year. At that point, you would be looking at doing manual corrections within the employee details. So you'll get confirmation that the clear out down is complete and you click OK. So this wizard will clear the following. In the Payments tab, it'll clear the hours to date, values to date, and net value to date. In the Deductions tab, it will clear employee and employer balances. In the Pay/YTD tab, it'll clear non-tax deductions for the financial year. And also then PRSI for the employer financial year. This wizard will not clear out the following. Just to make a note, it will not clear out the standard amounts, figures for reducing balance deductions, total EE and total ER values in the deductions tab, and the from the start figures for non-tax deductions. So if you wish to clear out any of these, then you can skip this wizard and do the financial clear down from the drop-down year-end menu as we used to do. You'll find notes on how to do this on page 46 of your booklet, but we will go through this before we finish today. So if your financial year is different to the tax year, you should select Do Not Clear Down Financial Year Balances now. In your calendar window, you're going to enter the correct period in the financial year. Down the bottom, financial year will end after period, whatever is relevant to you. So to set up your new calendar, you're in your new calendar window and enter the dates for the first period in 2024. Enter the nominal start date and then click Update. Okay, so a few notes with regard to the dates. The pay date field is the date that drives the calendar to generate subsequent periods. And you'll notice that the period date is no longer available in the software and the pay date is at the top there now. So your pay date must be a date within the allowed date range for that period. And this is the date, again, included on every payroll submission to revenue for your employees. If you're on a weekly payroll, your first pay date should fall between the 1st and the 7th of January next year. And for a fortnightly payroll, it should fall between the 1st and the 14th of January 2024. If you're unsure about this topic, you can refer back to the notes at the beginning of stage 2 in your booklet regarding the dates. There's a bit about it there. When you've entered the dates for the first pay period of the new tax year and valid pay days if you're not on a weekly payroll, then you click Update. So once the calendar is updated, make sure that you have 12 or 52 planned periods in your new calendar and that all the pay dates are in 2024. So you can actually edit it then from within the calendar details window, and don't forget to hit save down the bottom. Repeat this procedure for each of the payrolls you've set up in 2024, but if you do have multiple payrolls with the same frequency and pay date, you can copy the calendar in the Administrate section. Step 4 is to set up your ASC or your additional superannuation contributions if it applies to you. So ASC is only relevant to public sector employees. If you have employees that are liable for ASC deductions in 24, you should check the ASC settings within their records. So on the menu bar, click Processing and then Employee Details, or just go to Edit Employees. Select the relevant employee and click on the Deductions tab. So assign the appropriate ASC settings to each employee. If the employee is in a subsidiary employment and their main employment is elsewhere, select the subsidiary checkbox. Click Save to save any changes you might make. Now we'll just jump back to clearing the financial year end balances manually. So the tax year runs from January to December. So your company's financial year may not coincide with these dates. So your financial year might be August to 31st July. But if your financial year does coincide, then you need to carry out the financial year clear down before running period 1. If you've opted not to use the wizard, as we went through earlier for whatever reason, then we'll go through how to manually clear down the financial year balances. So please ensure that you're in the 2024 software. Do a backup and print the following reports. Print out the cost analysis report, the payments report, the deductions report. So to clear out the cost analysis first, we're going to up the top to year-end, financial, clear cost analysis. A message alerts you there that the cost analysis will be cleared. Click OK to carry out the clear down. And you just OK again when you get the message that it's complete. To clear the Payments tab, select Year End, Financial, Clear Payments. So this table displays all the payments that can be cleared. So you have the option to select hours and/or values for each payment you want to clear. Click Clear Selected to proceed with the clear down. If you select nothing, nothing will be cleared. In general, most people select all payments to be cleared so they can start the new year with nil balances for all employees. So different payments can also be cleared down at different times of the year if required. So when prompted to continue, hit yes, and the financial year balance items will be cleared out. And then click OK when it's finished. So the deductions, again, up the top to year end, financial, clear deductions. So deductions look a bit different as there are more columns to select from. So you can choose to clear one or more of the following: the standard amount, which is the amount deducted each period, the balance, so that's the balance accumulated on that deduction since it was last cleared, and the total, which is a running total of the deduction since it was first introduced. The wizard doesn't clear this one, but a lot of users want to clear this anyway. The tax year balance, and again, that is the tax year balance. So a few tips here. Do not clear down the standard amounts, and do not clear any of these boxes for a reducing balance type deduction like loan or bike to work. And down the bottom left, you can also clear the employee and employer non-tax deduction history by selecting these check boxes. Again, the new wizard will not clear down the from the start section here. And again, if you select nothing, nothing will be cleared. So once you have selected the deductions you want to clear, select Clear Selected. Again, you just ask for confirmation, click yes, and again, you get that it is cleared out. So you can confirm that the cost analysis, the payments and deductions have been properly cleared by running these reports again. Another significant change in 24, as I said earlier, is that the CWPS calendar will be changing back to January to December. In Sage Payroll, you must now run the CWPS year end, which is in stage 3, step 5. This will involve setting up the new calendar and clearing out the year-to-date balances. The timing of this is important, however, because it must be done before setting the first period in 2024. To clear out the CWPS history, ready to start this new year, from the menu bar at the top of your window, click your year end, then click New Construction Pension Year. You will then receive the prompt to clear out the balances and the history, and to continue, just click yes. Now we'll set up the 2024 CWPS calendar. So from, again, company/payroll, then click Construction Workers Pension. Click the Calendar tab. Enter the start date of the new CWPS tax year and the new CWPS year, and that's going to be the 1st of the 1st, 2024, which is the first Monday 24, and then click Create. Check that the dates and information are correct for the new CWPS year. If not, you can amend them as you need be. They should be okay. Then you hit OK. And that's stage 3 complete. So we've now set up this calendar for 24 and cleared down the old payments and deductions from the employee record. And now on to stage 4, setting the first period of 2024. To set the first period, select Processing and then Set Period from the menu bar at the top, or just the Set Period icon is fine. In the Set Period screen that is presented, ensure that the new period to process is set to 1. And check that the dates proposed are appropriate for the first period and that the CWPS calendar, if you're using it, should be at week 1. Click OK to continue. So if you've not set up your 2024 calendar, you'll be prompted to do so at this point, and you can go through the instructions again there. When you click OK on the set period screen, you'll be prompted to roll forward your holiday and absence year. So if your payroll holiday year finish date is the 31st December 2023, you'll automatically get this prompt. So you can find details of exactly what happens here when you hit yes on page 41 of your booklet. But I will say that even if you don't use the holiday feature and you get this pop-up, you should still select yes to roll forward the payrolls and holiday and absence year, because otherwise the screen will keep appearing each time you set the period. Then you're ready to retrieve RPNs for the first period of 2024. So RPNs for 24 are usually available, and I believe they'll be available at the end of this week. And for information, you can always go to revenue.ie. So once you've completed steps 1, 2, and 3 in stage 4, you can continue processing your payroll as normal. And that's stage 4 complete, and year end basically complete, and you continue with 2024 processing after that. So a few other things. I want to draw your attention to the guides and other information at the back of the book. We have covered some housekeeping already at the beginning of each stage, but some additional tasks should be taken regularly, like checking your director settings, checking your pensions are set up correctly, and all employees have pension tracing numbers on their records, start and finish dates of your employees. But again, you can go to page 43 for details of how to do each of these things. And of course, we'll mention budget 2024 and main items that will affect the payroll for 24. There's an increase in the standard rate cut-off from 40 to 42,000 for a single person and equivalent for married people, etc. An increase in tax credits from 3,550 to 3,750 for a single person. There's a change in the 2% and the 4% rate bands for the USC. There's an increase in the rent tax credits to 750 for people who rent their principal private residence. An increase in the home carers tax credit from 1,700 to 1,800. And there's also a change in PRSI for over 66. There's a full summary of the budget changes in the booklet and on revenue.ie. You may want to review the PRSI class for all of your employees once you start into 2024. For all of your employees over 66, that is. They'll currently be on J1, but if they take the option to defer drawing down their old age pension, they could possibly still need to remain on A1. The new software, the warning about the PRSI class is now deferred up to age 70. So you won't be getting a pop-up to say when somebody reaches age 66 that they can't go on, that they must go on to J1. You won't be getting that now until they're 70. So you probably need to review people between age 66 and 70. Okay. Statutory sick pay entitlements, the SSP, will also increase from 3 to 5 days in 2024. This is built into the software as well. And all the tax changes and PRSI will be coming in on your 2024 RPNs. Just a note now also about the cutoffs for SSP taken in 2023, which is to be paid in the first period or even later in 2024. Revenue have told us that the payment for days of statutory sick pay taken in 23 will need to be processed into 23 software. So when you become aware of it, or if it's a case that you only get a certificate in 24, then you will need to open the 23 software again and rewind into the last period Enter the SSP taken and resubmit to revenue. At this point, the employee will need to be paid also outside the payroll, and those days obviously won't be paid in the 2024 like the rest of his pay for that week will be. Okay. And now we'll take a quick look at the enhanced reporting requirements introduced or to be introduced in 2024. It's not technically part of the year-end, but it's a new feature in the year-end software and a new reporting requirement that will commence on the 1st of January 2024. The Finance Act 2022 introduced the Section 897C, which will require employers to report details of certain expenses and benefits made to employees and directors. Reporting the details of these expenses and benefits will commence on the 1st of January. So the three categories of expenses that must be reported are small benefit exemption, remote working daily allowance, and travel and subsistence, which is further broken down into various vouched and unvouched categories. Sage Payroll facilitates the generation and submission of the ERR data to revenue through a direct connection similar to the normal submission process. The process within the software is, firstly, you set up your payments as expense type payments. Then you process your expense payments through the payroll as normal. You can generate the ERR submission by entering figures for each of the ERR categories. And then finally, you make the submission through the Sage Payroll software. But we'll step through a bit more detail here now. So firstly, you must ensure that these reportable payments are made to employees using a pay element with a type expense. It's a new type that's been set up in Sage Payroll. If you have travel expenses or other type expenses already set up in Sage Payroll, you may need to go in and edit them and change them from a type variable to a type expense. You can set up and use several pay elements for each employee. You can have one for meal allowance, travel expenses, the remote working daily allowance, but they must all use the type expense. You can pay employees, end the period, and do the payroll submission as normal. So you'll notice the new Send Enhanced Reporting Submission button on the screen in 2024. And to do your ERR submission, you just select that button. So you're then presented with this ERR screen, which gives you one line for each employee showing a total of all payments made under the payment type expense for each employee. So all of the expenses that you've paid the employee, you can see on the pay slips there may be 2 or 3 of them, but they're all totaled together with one line for each employee. And this total amount must then be split out into the various categories on the right-hand side. So this can be manually entered by just double-clicking on each box there, or there will be an import facility available for those with larger numbers of employees. So when you're finished, you save and then next, and this will bring you to the revenue log on screen as you normally do. Just a tip there that you can click the little blue I there beside the total expenses paid, and it'll give you a pop-up and see the breakdown of the expenses as they were paid in the payroll. So this will help you when you're dividing the total into the various categories. So again, it's the usual log on to revenue screen, check the ROS credentials, and then hit next. You'll get a confirmation window and you click OK on that and it'll be submitted. ERR submission log will be created and visible in the Sage Payroll. Up the top, it's direct payroll reporting, enhanced reporting, and then view enhanced reporting submission log. We believe an advanced report writer, an ARR report, will also be made available to print out the ERR data. Pimbrook will be issuing a how-to article and maybe a little video in the coming week or so. So watch out for this on our website. And that concludes our year-end webinar. We hope it's been informative for you and will help you to get through your payroll year end without too much hassle. Some good news, we'll be giving away a lovely Christmas hamper to one of our lucky attendees of these webinars. The draw is going to take place on Thursday after the last webinar, and the winner will be notified by phone. On the screen there now, you can see that we have lots of resources available to you on our website. And you will be receiving your payroll end of year knowledge base with links to all of these by email over the next day or two. They're all available in our banner across the top of our website, even at present. And as usual, you can call into support for any help that you might need. So I'm just going to take a few minutes here now just to see if we want to deal with the questions. I just want to have a look and see what's coming in. Okay. I'll be back to you in 1 minute. Okay. Some questions here now coming in on the chat. Can the clear cost payments deductions reports be saved to be printed at a later date? I believe they can. Yeah, the cost analysis, payments and deductions reports, they can all be saved in your year-end folder, no problem. If you need help with that, just call into the team here. There's no problem with that. Can 2024 payroll be set up after year end is completed, before January 24 for monthly? Can 24 payroll be set up after year end is complete? Yes, that's generally when we do it. You run your year end and that throws over your data into the 2024 software. But you must have run your software update if that's what that question is about. You must run your software update and then complete your year end in 2023. And that'll set you up then for 2024. I ran the 23 year end update yesterday, but the 24 icon has not appeared on my desktop. Is this correct? No, if you ran the version 23, 26.3 software update, if it ran correctly, you will have the icon on your desktop. So maybe call into the support team. They'll be glad to help you with that. That's no problem. Can you run multiple ERR submissions at different times during a pay period? Your ERR submission must be run at year end and at period end. So if you the short answer is it's not going to be very easy to do that. So it must be done on or before you pay people, or on or before you pay them. So unless you are paying people expenses at multiple times during a period, you wouldn't have any need to do that. So your ERR submission is due on or before you pay the people, which generally is your payroll. Not many people would be running payroll a couple of times during a pay period. There is one important factor here is that if you do have interim pays during the period, you need to rewind your payroll. And in rewinding your payroll, you will clear down any analysis of your ERR. So it's important that you are sure that your payroll has finished for the period before you populate your analysis of your ERR, because if for any reason you need to rewind your payroll, the ERR categories will be wiped out. If for any reason you are paying somebody outside your payroll an expense, remember you can always go on to the ERR portal on the Ross website and submit random payments. Okay, so hopefully that, if you have any further questions, hopefully that answers that. But if you have any further discussion on that, call into us on support. Should I run 26.3 update now or wait until running final year-end payroll? No, there's no need at all. The sooner you get that run, the better. So there's no requirement to wait until after you run. In fact, we prefer you run it before you run your last payroll. Is it a big problem if we click typical instead of custom when we update payroll? Generally, it's just you hit custom to confirm that your directories are correct. In particular, if you have a client server, it will need to be pointing to the server, the data on the server. Sometimes if you have admin issues, it can be pointing to a local directory. So it's important to confirm that your payroll directories are as you have noted. But if it's all worked fine, I'd say leave well enough alone as long as it's all been updated. It's important to check that it has been updated when you go in and open the software. Do all expenses have to be reported through ERR, or is there a lower limit? No, I don't believe there is a lower limit, but you probably best confirm all this with revenue. But any payments, as far as we understand, made to directors or employees, directly to directors or employees, I believe non-tax expenses have to be reported through ERR. But again, that's revenue's domain. Maybe confirm all of that with them yourself. Weekly payroll. Week 1 was the 6th of January 23. Week 52 will be the 23rd of December 23, which is a Saturday. So week 1 is 31st December 23. Should I implement week 52? So week 1 is 31st December 24, I take that is. I'm not so sure on those dates. I can see, I'll give you a call later. Trish sent that in. If it was the 6th of January 23, you should still only have 52 weeks. So yeah, we'll go through the specifics of that maybe on a one-to-one, might be better. Okay, received my Pimbrook, okay, sorry. Presentation slides will be available, the video will be available once all the webinars are finished. Do you run the year-end update at the end of period 11 after processing or at the start of period 12? Monthly payroll, obviously. You can run this year-end update once you're at end of period 11. Because you either have to be at end of period or start of period, it doesn't really matter as long as the payroll is at one of those and not in time and pay. So either one of them is absolutely fine. On 2023, it is not giving an option to set up 2024, even though I have ran the update and I am on version 26.3 with the shortcut on my desktop, but it doesn't let me log into 2024 either. Okay, first of all, you won't be able to log into 2024 until you have set up a payroll in 2024. If you don't have the option to set up 2024, well, then your software has not installed correctly. So if you need help with that, call into the support team. It could be just that software needs to be run with administration rights, which you may or may not have had at the time. So if you call into the support team, we'll help you reinstall that, okay? Can I send ERR only after the payroll? Your status of your payroll must be at end of period in order for you to populate the ERR submission. And secondly, you must have processed expenses in the payroll in order to have something to populate it. So yes, only after you've done your payroll would be my answer there. Just flicking down through them. Will we have recording on our website next week? Yes, once the presentations are over and our people do the business, it'll be put up on the website. Okay, I think that's all of our questions for now. I hope that's helped everybody, and a few people there. If you want to get back into the support team, we can help you. Okay, sorry, there's still another question after coming in. I'll sneak it in there. Reclearing deductions. Do you not tick any of the boxes for bike scheme for standard amount, total amount, balance if you have reducing balance? No, you tick nothing for reducing balances. So just leave them all blank. All right, thank you very much.